Welcome to Top Traders Unplugged, the place where you can learn from the best hedge fund managers in the world so you can take your manager due diligence or investment career to the next level. Here's your host, veteran hedge fund manager Niels Kastrup Larsen.
Today I want to introduce you to Alex Tselentis, the founder of Odyssey Analytic, a Swiss investment advisory firm. And Alex, let me start out by asking you, how do you respond when a person you haven't met before asks you what you do? How do you explain that?
Yeah, morning, Niels. Thanks for having me on Top Traders. How do we explain ourselves? We're a socially responsible investment firm, and we focus on long-short equity, and we apply a quantitative approach to the green sector, which makes us fairly unique.
Sure. Well, let's talk a little bit more about that in sort of more detail about your trading strategy and investment approach, and also what you try to deliver to your investors.
Well, the first thing is we're socially responsible. I mean, that's the key. That's the headline term that we use in everything that we do. And we actually produce a quantitative product in a world where everyone is purely qualitative in the socially responsible in the green sectors. And this means that they focus very much on politics and they focus on actual specific technologies. But history tells us that we as humans are not very good at reading politician signals, nor are we very good at consistently choosing a new technology that will win out. And ourselves, being quants and having a quantitative approach to valuation, we thrive on the dislocations and valuations that our peers, who are all qualitative, actually create in the markets in terms of valuation.
And being social responsible, what does that mean to you?
Social responsible begins to begin with your actual ethics as a firm, to actually put your clients first. And the way we do it, one of the first things is we have absolute transparency with our clients. So there are no big secrets, there's no big black box, and it's not just about a NAV that you get at the end of the month. We actually enter into dialogue with our clients. We give dialogues full transparency of the portfolios. They can see what they invest in on a daily basis, and they have every right to because it's their money.
Sure. And
part of that dialogue is we follow pension guidelines. So, for example, we do not invest in armaments firms, tobacco firms, alcohol firms, firms involved in gambling, firms involved in labor issues, child exploitation. So it's actually a very, very broad term, and it defines our universe quite conclusively.
And I don't know whether there's a way to quantify this, but if you look at the full universe and you look at your universe being socially responsible, how big a percentage would you say that your universe
around 10 to 15% of the companies are removed automatically.
Okay. Now, as an investment manager, Alex, no doubt you've had some great experiences and maybe you've had some less great experiences. Can you share some of those from your past?
For us, the great experience is to actually deliver on the product, because when we began with this our new fund, Odyssey Green Planet, people did not believe that a quant could actually add value in the space, and we obviously see things kind of differently. So for us, it's been a journey to actually show people that we can actually, create alpha, and that we can actually create alpha with far less volatility than indexes can deliver. And that's a key thing, because I believe as a hedge fund manager, our biggest competitor is not even other hedge fund managers or even long-only fund managers. It's to actually be able to beat passive indexes.
Sure. What's the most difficult thing that you do in how you operate, would you say?
Truthfully, I have no idea.
That's fair enough. Now, in terms of market outlooks, you're a quant. Do you have any form, or do you form any outlooks that has an impact on the investment process?
We have no personal outlook on anything. We follow models that have a very good rate of prediction that can see a possibly 4 to 6 weeks into the future, but no more than that.
What forms the basis of these models, Alex?
Patterns in volatility. It's almost like an earth tremor.
Mm-hmm.
And they tend to signal that something's going wrong in markets, earnings, are often a very good precursor of major events in markets, and often small things which people tend to forget about, tax receipts, for example. People forget that if tax receipts start to collapse, and we can see currently, say, in Southern Europe, it tends to be a very good indicator of recessions or recession coming up.
Alex, although you're a quant trader and don't necessarily have a market outlook, can you tell me a little bit about some of the interesting trades you've seen in your portfolio that may also set you apart, say, in the past year or so?
Well, thanks. It's actually quite interesting because from a quantitative perspective, we actually see trades being structured, being selected by the computers in terms of valuation and the valuation models. And when we start to dig, we start to understand things a lot better. Ourselves, when we look at the world, we do a lot of vertical integration. So we look up the value chain for each of the industries that we'd be looking at. So for example, a very good example, solar. And in the solar sector, you find a fantastic pairs trade, which we followed the whole of last year, whereby solar manufacturers, automatically assume that they would be a good buy. But going back to the idea that we're not very good at selecting a specific technology or production process as an investment manager, there are approximately 45 of these companies and they're competing all on price. So you actually find that the hardware manufacturer almost sets themselves up as a natural short. And then on the long side, you find within the vertically integrated industry, you actually find the sweet spot actually lies with consultants, because the engineering firms, they will always earn their 7 to 10% on every contract, irrespective of the price of the solar panel, for example.
Sure.
So we actually had a very, very good pairs trade with that same concept, and we've seen the same concept line up in wind. We've seen the same concept line up in energy efficiency industries, in water, and this is very much part of the way the fund works. It almost is contrarian because people hear or think that you will always focus on the hardware side, and the hardware side is actually the trickiest part. And you always find in the value chain, there are one or two manufacturers or producers that actually have monopolies. So for example, we're very bullish on 3D printing. And I believe that in terms of energy efficiency, it will be one of the major revolutions of the next 10 to 15 years in terms of both transportation and logistics networks, because we have to move far fewer materials, which this will have a huge impact, say, on shipping and in rail.
Sure.
But on the other hand, in the way people work. And people automatically think, well, so what are you long in the 3D sector? And again, it comes down to the story of actually we short pretty much all the hardware manufacturers. But at the same time, we found sweet spots in people who have proprietary technologies to manufacture, say, titanium and titanium substrate that you would use in the 3D printing process. Mm-hmm. And they have monopolies. Sure. So you actually see automatically where the sweet spot is in that industry. It's almost like laser printers. It's the manufacturer of the toner, not necessarily the manufacturer of the actual hardware.
Right. Interesting. Now, I know you pair most or all of your trades, but let me ask, does the fund have a bias in any way, long or short?
We always have a long bias. Even in a bear market, we have a long bias because you can still make money on the long side in a bear market. Sure. People are surprised by this. We also do it primarily for stability, so we don't get major short spikes, sure, particularly in bear markets.
Sure. Well, so far we've talked about your strategy and a little bit about your outlook and some interesting trades, but I wanted also to give you a chance to talk a little bit about yourself, your background, and perhaps a little bit about the journey that you've gone through in order to end up as a quantitative long-short equity manager.
Well, it was actually quite interesting. I started off in civil engineering as an engineer, and I've always had an interest in trading and always traded my own accounts and was working towards a PhD in finance. And I started to actually realize that there were consistent ways to make money in a market that's supposedly efficient. Mm-hmm. And these tend to evolve around valuation and valuation methods, which are outlined in the behavioral finance literature of the last 20 years. And once I realized that, I thought, well, I'm entrepreneurial. I ran businesses in the past. This is a fantastic way. I continue the research and actually build a business. And this is how I set up my first fund in 2010 and entered this space, being the socially responsible quant space, which I think we're pretty much one of the few, if only, firms in it about 2 years ago. But it's taken quite a lot of research to get to this point. It's approximately 15 years of work.
Sure. No, absolutely. Very interesting space, very interesting story. Alex, thank you very much for this brief introduction to you and to your investment strategy.
Pleasure, Niels. Thank you for having me on your show.
Thank you for listening to this short introduction. We hope this has sparked your interest, and we look forward to seeing you at Swiss Financial Services' upcoming Emerging Manager event in Zurich.